This property report is powered by realestate.com.au. Know the value of your home today. Track your property now.
To property now, and as interest rates have remained at record lows, the ability of buyers to borrow more has naturally increased. But a jump in high debt to income loans has attracted the attention of the federal government and regulators. Joining me now from realestate.com.au is John Healy. John, good afternoon. The regulator APRA did take action this week to implement lending curbs across the board.
Well, that's right, and it was really becoming a matter of when, not if, restrictions would be introduced to help curb mortgage lending. But the timing did surprise many people that it came so soon, with APRA on Wednesday announcing that the interest rate buffer that lenders must use when assessing mortgages would be raised less than 24 hours after the RBA kept interest rates on hold at their record low of 0.1% and hinted that regulators were looking at increasing the mortgage serviceability rate. The buffer was raised from 2.5% to 3%, meaning that lenders must decide that borrowers will be able to make their mortgage repayments on an interest rate 3% above their actual rate or the floor rate set by the bank, whichever one is higher. And it's estimated that the change will help reduce people's maximum borrowing capacity by around 5% and help to take some of the heat out of the very hot property market. And it comes a short time after other data from APRA had revealed that 1 in 5 buyers were borrowing more than 6 times their income to purchase property in the June quarter, and follows other ABS data that was out late last week that revealed that new loan commitments were $30.76 billion in August, which are up 47% year on year. But there could be more macro-prudential controls just around the corner, with some economists expecting more targeted restrictions on high debt borrowers to be implemented late this year or early next year.
And now, despite remaining in lockdown, things are actually looking up for the Melbourne market, John, with a Super Saturday on the cards there this weekend.
Yeah, that's right. Things are really looking up for the Melbourne property market now, with the delayed start to the spring selling season finally arriving, with a Super Saturday scheduled for the Melbourne market this weekend, with more than 1,100 properties set to go under the hammer, which is an increase of 55% week on week in terms of auction volumes. And auction numbers in every capital city are up this weekend. Apart from the ACT, around Australia, we're expecting just over 2,500 properties to go to auction this weekend. In Sydney, more than 580 homes are set to go to auction, which is an increase of 18% on numbers last weekend, while there'll be plenty of auction buzz as well on the streets of Brisbane and Adelaide, with auction numbers there up 18% and 43% respectively week on week.
And while major markets like Melbourne, of course, Sydney, but also the ACT, they appear to have clearer pathways out of lockdown. Despite this, though, online auctions are remaining the norm for now. How did sales in those markets and elsewhere fare last week?
Well, on the auction results available, the auction results in those lockdown markets was very, very strong again. And in fact, clearance rates were up in every capital city around the country when compared to a week earlier. Sydney and Adelaide actually had their strongest clearance rate result in 8 weeks. Melbourne had its best result in 7 weeks. And again, it really just does illustrate again the huge levels of buyer demand that are currently in the market relative to the amount of properties that are actually for sale, that there are 4 capital cities there sitting above the 90% clearance rate mark.
And just finally, John, which properties have caught the attention of buyers this week?
Well, the most popular properties this week, buyers have really been drawn to big homes on big blocks with some really big price tags as well. The top 5 list this week has homes dotted around New South Wales, Victoria and South Australia. The most viewed home there is in Hawthorn, just around 5 kilometres from the Melbourne CBD. It's an unrenovated 8-room mansion, actually, with a price guide starting at $7 million. And skipping down to the 5th most viewed home this week, it's another Melbourne mansion, this time in Kew, but this one's been dubbed one of Melbourne's finest family estates. This home is a 6-bedroom property on 4,600 square metres, and the top end of that home's price guide is up above $18 million. But if we have a really quick look now at our second most viewed home, it's in Perth, just 40 minutes drive actually south of the Perth CBD in Baldivis. This is a 6-bedroom home on 6,900 square metres of land. It's got 5 separate living areas, 5 king bedrooms, a granny flat, some beautiful gardens to keep the family and friends entertained. And this home has a price guide, Danica, of the low to mid $2 million range.
Well, casual $2 million, but I tell you what, for a property like that, John, you'd be pretty pleased with yourself. Absolutely stunning. John Healy, thank you. We'll see you again next week.